All right, hey everyone, this is Hugo Dos Reis. And I've got a very special guest, Mr. Paul DeBruzza with Rockstar Realty, realtor extraordinaire, works with thousands of investors, and has been in this world for how long have you been doing this one, Paul? Really, for a while.
15 years, man. We're getting old.
15 years. So the nice thing about having been in this world for a long time is you kind of have seen a lot of cycles. I know we have. We've seen rates at very high levels. We've seen rates at low levels. So we've been through a couple of cycles, and these conversations and the environment we're in now, I feel like is not it's not unusual. It's not the first time. It's a bit unique, but certainly not the challenges we see now. I don't know, first time. And that's what I wanted to get into is just, we've got Trump declaring trade wars. We're dealing with all that uncertainty. Rates recently have come down a little bit, and the market seems to believe that there'll be a couple more rate cuts. There's still a little bit of uncertainty in how much rate cuts are necessary and how low rates can go or will go. There's also concerns around like property values and real estate. So there's just a lot of uncertainty in the air. And I just wanted to get a bit of your take. Being on the real estate side of it, what are your thoughts, opinions? Like, what kind of conversations you having right now?
Yeah, a lot of different angles. I mean, we don't have to get political here, but the whole tariff thing is just it seems to be opening the part of just one every conversation, right? And I'm not taking a political position here, but what I tell people is that for your specific case, it's not going to matter. It doesn't not going to affect immediately how you invest your money. But the broader conversation we have is that, on the US side, we're even saying names, like they're using this as a negotiation strategy to get what they want. You don't have to like it, you don't have to hate it, but you can't control it. The only thing you can do as an investor is navigate yourself through it in the best way possible. And that's where I tend to leave it. So we'll focus on things we can control and not the things that we can't control, and we eliminate all the complaining. On the rate side, I remember saying this when in the last year and a half, when you and I was on some recordings, that I've been waiting to get to exactly this point where rates are hovering around the 4%. Anything in that 3.99, 4.25 type of thing, a lot more investment strategies start to make sense again. The last, 2.5-ish years or so, we've been not stopped, but we've been focused on only the investments that work, and it's been multifamily and some basically multifamily development.
Anything more than 1 unit because of the economy.
Anything more than 1 unit. Multifamily is like the investment that never goes away. It goes from good to, and it gets better with the conditions of the marketplace. So that's always a place to lean back on. But it's not a place where a new investor is always going to start. Sometimes an investor needs a baby step with a single family home, a condo, some sort of speculation type asset. And those are the ones that have just completely disappeared out of the marketplace. But I think as we, inch closer to that 4%, everyone's comfortable seeing a 3.99, advertised at the bank. Those investment strategies start to become viable again. And, we need that. In my view, totally personal, purely from the investment side, is needs to get buyers back in the marketplace. I know there's sellers and people are hesitant. In my view, the sellers will react to buying. So once there's consumer confidence again, and the risk capital re-enters the market, it just confidence the sellers to say, let's see if we can get the price I want. Not that, let's hold off because I don't think I'm going to get the price I want. It just gives you that shift, right?
Well, because I feel like just through conversations, and you know better than I do, that the sellers are holding back. They're like, my value is still what it was a year or 3 years ago. It was higher. I want to try and get there again. There's a bit of like a mindset, like I'm trying to get to a certain level. Let's wait till the summer or the fall. Let's see some value. So that's obviously limiting what's coming to the market. But on the other side of it, there's a lot of buyer conversations. People are getting ready. The rates are within a reasonable amount now in terms of cash flow. And I think they're also thinking, like, I want to try and get a deal. And I guess it's my other question is like, are you seeing deals for those guys that are very ready to go?
We are, because we all have our own nuances and opinions about what's going on and what can change it. But the data speaks, and the data is that we have a lot more listings now than we did and there's just not enough buyers in the marketplace. So we need buyers to come back in and balance out that demand. And as sellers see inventory fly off the market, they're going to put theirs on. It's going to come back,
Yeah.
right?
So it's
I
really
think
just momentum. It's always going like that.
it's momentum, and we need that consumer confidence. We need some good news back in the news cycle, that shows with certainty, because a confused mind always says no, right? If people can't, real estate's obviously, we know real estate investment's a long-term game. If the average buyer, average real estate investor, or first-time investor even can't predict what's going to happen in the next 3 to 6 months, they're not going to invest. They're confused.
Yeah,
You got to
especially
be
as an
able to
investor.
predict
Yeah.
12 months and beyond, right?
Yeah.
So, from our perspective, we see, from the 100% category, we see about 10 to 15% of our investors that we work with, and we work with hundreds of them, don't care. They have great businesses, good jobs, their whole life, whole financials are great. They have the capital to invest, and we're behaving as they should. And then we have another 10 to 15% who got hurt badly in the marketplace sadly, with some of the real estate scams that went on, or they got into some speculative condos and are sitting there with negative equity, and that's really stopping them from making more money. You're worried about how to close on this condo or assign it or sell it or get out of it. And then there's a big chunk of people in the middle who have some capital, but have lost value in some of their portfolios. So they're holding on to that one bullet they have to make the next investment very tightly. And they're looking for certainty and they can't find it. So I'm waiting for certainty to come back. And we're doing what we can to sort of dissect the data to tell people this is what's real and this is what's nonsense on the news. Back up the real data. And
I don't know if you want to share, but is there certain markets in where you're operating where you're seeing a lot better deals, or there's just a little bit more confidence right now?
Well, anything that's small multifamily right now is doing extremely well.
So like under 4 units or 4 units and under? Yeah.
Yeah. Generally under 6, but yes, for the most part in the 2, 3, 4 unit range is doing extremely well because prices have come down, values have come down from the peak, 10, 15, 20%. But rents have only come down about 5% on average.
True. Yeah.
Right? And now rates have come down. And, let's say a year and a half, 2 years ago, where rates are at their peak and you were negotiating really hard for some of these assets. Yes, the investors were close to cash flow neutral. It didn't make sense. But I was telling them, hey, wait for this day because rates are coming back to 4%. And 2 years later, they're loving it. They're like, oh, I'm cash flowing $1,500 a month on a silly
It's satisfying to see like a mortgage statement that says like 5.8, 5.9, 6. And you're like, your rate's now going to have a 4 or even a 3 in front of it in some cases. Right? Like it's pretty awesome to see that. Whereas, because I remember the other conversation where like, I know you're at a 2, but now it's going to have a 5 or a 6 in front of it. Yeah. But it's kind of going the other way, which is pretty nice, especially if those guys that will roll the dice 1 or 2 years ago in the middle of chaos when rates are going up and said, you know what, I'm good. I'm just going to see what works out. And they're not going to benefit from the cash flow improvement.
Exactly. And for you investors, I'm saying the entry level product for me in my mind is always going to be the duplex. It is the easiest to explain. Everyone knows what a duplex is, up and down, side to side. It doesn't matter. And it just makes sense. Prices have not recovered that much from the low, but rents have stayed, pretty much neutral or down 5 or 10%. And it's an very easy investment to manage. And you can rent a condo, you could rent 2 condos on top of each other, which is basically what a duplex is. It's not rocket science. And you're getting the cash flow. And when you have cash flow, I mean, we all know this, but you can ride out the storm. Like the storm we had for the past 3 years, everyone who was cash flowing wrote it all out. Everyone who got hurt was in a scam with one of those people we won't mention or had negative cash flow condos. And look where happened.
Yeah, I agree with you. I think you have to take a little bit of risk and kind of get into the market because I remember a few years ago when rates were in the low 1s and it's like people were just buying stuff that they couldn't even see. They were just like, I don't even know if this is worth $1 million or 1.5 or this is there. It was wild. I remember just like nobody knew what the value was. We didn't know how to finance it because we weren't sure where the price was going to be at. And I think it was just that crazy momentum where it was almost like already past the peak where it was like everybody was trying to get in the market because the rates were so low. And it just didn't make any sense. And that bubble was basically just
Yeah, pick up, huh?
happened.
And
Yeah.
the way we study the data, we've come out of the bottom of the business cycle, and we're just starting to trend. The pendulum is slowly swinging the other way.
Yeah.
So what better opportunity to, no, I'm a salesman, so I'm always aiming at something, but I'm entering the market. Like I, in my own words, so I promise you, I practice what I preach every time. And we're re-entering the market in a bunch of different ways. And it just makes complete sense. And for those like real estate, I mean, please educate me, because you got to find me something that does better.
Yeah. I mean, historically, it's always been the way to go for sure. And I
Right.
know the last couple of years, if this is when your journey into real estate started, you're going to be a little bit jaded by the whole thing because of how, how much, but that's kind of one of those things where you see every decade or every other decade. It's not it's part of the cycle. If you're long term, everyone's fine for the most part.
If you're long term, a perceived crisis in the marketplace is the best time to enter, because the
Yeah, that's
fundamentals
true.
make sense, but everyone's scared. What more could you ask for? Even if you're in the city, you're in Toronto, things are obviously more expensive, more difficult. Still, that duplex type property is going to be rented all day, no problem. Always going to be demand, and
I
you're
think it's just basic fundamentals. Like you're in a city that has a population growth. I mean, we still have that several million plus immigration that came through the country that hasn't filtered through into some
nope.
housing. The builders, because of all the issues around buyers, have slowed down. So the amount of supply that's going to come to the market next year is going to slow down. So there's like a overwhelming demand, or will be an even greater demand for housing. And as long as you're in a market where there's access to jobs and infrastructure and whatever, like long term, you're fine. Might have to deal with a little bit of pain initially, a little uncertainty, but long term, yeah,
So I completely agree.
for the most part,
And
anyways, right? So.
who knows if race not even further? But
I mean,
I
it's crazy because anything could happen. I mean, we weren't even talking about tariffs, I think, seriously until like February, I think, or end of January. And that threw a huge curveball into everything. But I think even with the data that we know, most economists, I was looking at the math this week with the rates drop. The most bullish economist thinks rates will be down 75 points to 1%, but on average, they were closer to about 0.5% by the end of the year. That's the data today. That could
I think
change.
I think
Well,
everyone would love to see 2.5% interest rates, but fundamentally, if we hover at 3.5, or under 4, that's really healthy. It's a healthy place to be.
that's a pretty balanced world. That's what we've been saying for years is like we went from like the low ones to the high sevens and have all of that. But prior to that, historically, anywhere between a 3 to 4%, it's kind of where that cycle sort of went up and down. Keep in mind that we're still coming out of COVID. We're still coming out of extreme inflation. So we're still trying to get the rates environment back to where it should be. And we're not even there yet. We're not far from it though. So yeah, you're right. I think if you can get a rate in the current options that we're seeing now, and you're conservative, then lock it in. Because you
Yeah.
would be locking in at below historicals anyways, or very near the historicals. So if you're going to be risk averse. So I think, yeah, makes a
I,
lot of
I,
sense.
and I'm a fan of variable. I've been riding the variable the whole time. Even as it was going up, I stayed in, going was
Same.
there.
Yeah, I personally am very bullish on variable, and it was very difficult at one point to tell someone, hey, you should lock in at 6.5 variable, even though I can give you a 5 point whatever rate fixed when rates were so high. As long as you believe in the theory that rates would come down, it's difficult to make that argument. And I understand some people just needed that comfort. But once you did write it out and now seeing the rates under 4%, a lot of them are low fours, and have been able to kind of avoid locking in at 5+%. Because unfortunately, a lot of clients, they just like 3 to 5 years locked in the high fives, mid fives, which is kind of wild, you
Yeah,
know. But
yeah.
at the time, it made sense. So
What they say, vary the property and date the rate, right?
yeah, the date the rate, marry the home. That's
Yeah.
kind of the same thing, definitely with real estate investing, right? When we were talking about a year or two ago and the rates were so high, but values had come down quite a bit. Let's buy this property for 100, 200,000 or more less than what it would have been, even though your monthly payment is one, two, three, four, $500 more. Because at the end of the year, even at $500 a month premium on the rate, that's $6,000 a year of interest more than what rates would have been. If you could get that in a price reduction, that just made sense. So the clients that did that are a little bit more risky, they're benefiting now.
Yeah,
But
absolutely. I mean, what do you think is holding? I mean, you see this from a different perspective. What do you think is holding back the buyers from taking that pre-approval and actually taking action in the market?
again, I guess it just depends on the demographic and the end user. If they're investors versus first-time buyers versus resale, that sort of thing, they're all sort of different answers. But in general, anyone who's got a stable job that isn't directly affected by the tariffs, so maybe they're, you know, consultants, they're in IT, they're work for the government, like these sort of roles generally are not being directly affected. They're very comfortable and they want to buy. The main complaint I get is there's a lack of inventory. Because collectively as a brokerage, we're seeing tons and tons of applications come in across the country for pre-approvals. And the complaint is generally there just isn't enough stuff out there. So I'm not having too many conversations about people being concerned. It could just be the demographic that we're talking to. They're not necessarily concerned about what will happen because they're like, I'm stable, my income's fine, I'm not too worried about what happens. The rates are in a world where I'm very comfortable, and the prices I know are lower than they had been in the last couple of years. So I want to get into the market. So I don't think people are concerned about values in that way. The issues that we're seeing is the individuals that are closing on new builds. Like almost every new build that's like 1 or 2 years old is coming in below market. That's kind of scary, and it's a tough call to be like, hey, you bought this place, you got to come up with another 100. I have one yesterday. It's $150,000 more. And it's just, that's what the value is. Like you paid a premium because that's what you paid for it. So those are coming to market. So those are a little scary. And that will obviously have a downward effect on some people are just walking away from these things. It's affecting the comparables that are available in those markets. For a buyer, it's great because you get a discount. But for the seller, they're trying to hold these assets. So that's, I think what's happening is there's just a lack of confidence to get these products out there. And that might just hold back more and more buyers getting into the market, not because they can't. It's just because it's there's nothing that they like there. And going back to your point of momentum, you need to see the sales come up to create that appreciation.
It's a good point. Sometimes I even forget that a big chunk of the, you will say, investor market is people buying condos, and that market segment destroyed more than any of that. Yeah, there's a lot of those people are filtering themselves out of the not so good deals they make. So. Yeah, I think
but some of them, Paul, like are mentally holding on to these assets, and it doesn't make sense to me. It's almost like this anchoring mindset where it's like, I bought this place for 600,000, but it's only worth $500,000 now. But if I wait 2 years, maybe it'll get back to 600. I'm like, maybe, but you're going to be cash flow negative every single month, assuming you're renting it. Which means you have to feed this condo. It also means that you're not getting into the market anywhere else because you're keeping all your capital in this one property. I would rather just take the loss. It's a mental loss or it's a paper loss, really. Just take the loss on the thing, get whatever money you can out of it, and apply that to our property today that makes sense, that it will appreciate, versus riding this out for a year or two to maybe break even, but definitely be negatively cash flowing. So you're actually losing money. And on top of that, if you have a capital gain, you can write that loss against any future gains. So there's real value in being strategic and not thinking I'm losing this because I should have sold it 2 years ago or whatever.
We have so many people that like that, and I'm not crapping on them. It's an emotional way of investing, and emotions and investing don't mix. When you make a speculation, that's what it is. Sorry, on a condo, you have to be able. If you bet on red, you have to be able to take the loss. Right? It's like you're betting on red, and then you're praying to the guy behind the table to give you your money back, and it doesn't work that way. So you're better off taking the loss and reinvesting in 2 years to make it back up, because that investment not going to do.
Because there's no way to know that it'll be a year or two before the value is there. It could be longer than that. That whole time, property values and opportunities have kind of come and gone, and hundreds of thousands of dollars of lost earnings might have applied there because you did good. So those are conversations that you sometimes just have to bring back on the table and say, look, I know that you could have sold this for more last year, but we're not last year. We don't know when it will get there. Let's just work with what we have and the like you said at the beginning, let's work with what we can control, not these maybes, because there's still a lot of opportunities.
I agree, and not to blow our own horn. I know we can do that here, but this is why when you're working with investors, you have to work with a team who is actually investors themselves, because you'll be able to foresee this before you make the move, and having the strategy behind these avoids these mistakes before they happen. Right?
Yeah, because in a good market, it was an awesome realtor or a great broker. It's like, hey, you know what? Like, I'm gonna put a sign up and sell this thing and make my commission. Like, it's when the market are really difficult, both in your world, on the real estate side, on the financing side, where the real quality individuals sort of stood out because they were able to actually have those conversations, actually work through these harder scenarios and get stuff done, versus someone with very little effort who's selling real estate or putting a mortgage together. That's kind of what I think makes a big difference. And fortunately, for those that listen to that advice, hopefully they're a little bit more happier and comfortable with where they're at versus the unfortunate calls that I have, unfortunately on a regular basis still, with folks that got a deal done from someone who's told them they should get into it, and now this realtor's not even a realtor anymore, and they're stuck with this property that doesn't
They
make
went
any
out to their
sense
day
because
job.
yeah, they went back to their full time job. But I had one this morning. This woman was crying on the phone. I was like, it's a tough conversation because this realtor put her into something that she should have never bought. She didn't even qualify for it at the time, and she definitely doesn't qualify for it now. So it's just wild. There's a lot of that. So you got to work with some quality people.
Yeah, yeah,
But
up on all ends. Yes, I agree.
appreciate your time, Paul. I know there's an endless amount of new stuff coming out all the time, so we'll try to keep everyone updated. And yeah, I appreciate
Appreciate you doing this, Hugo.
it.
We'll press soon.
Thanks, man.